Snap is scheduled to report first quarter 2025 financial results after the stock markets close on Tuesday, April 29th, 2025. So I'm going to answer if investors can buy Snap stock before the company announces earnings, or should they wait until after to buy Snap stock. I'll let you know where I think the risks are most concentrated, whether it's to the downside or to the upside following the earnings release. I'll share with you what you should look out for from the company's numbers when they report financial results. And I'll also share with you my proprietary discounted cash flow model, which calculates a fair value for the business today. I'll do all that in this short video, so let's jump in.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So, in their latest quarterly earnings release, which came on February 4th, 2025, Evan Spiegel, the CEO, said that active advertisers more than doubled in the fourth quarter with the improvements we've made to our advertising platform, which drove improved advertiser performance. I want to see more of this in the upcoming release. This is a key factor for Snap. The company generates nearly all of its revenue from advertisers. So if it can improve the return on investments that marketers get for investing on the platform, that's going to drive increased spending from marketers because they're getting more money on the money that they're spending. Snap has a long way to go here. They're behind in the leader meta platforms in terms of the average revenue per user that they're generating. And part of the reason is that the advertisers on the platform are getting a lower ROI. And so if they can receive a better ROI, they're going to be willing to increase their spending on the platform. It's one way that Snap can generate revenue growth without necessarily needing to increase user growth, which is the next thing I think investors should look out for. In their more recently completed quarter, Snap said that they increased daily active users by 9% to over 453 million. I want to see the company continue growing their daily active user base, but I would really like to see the company growing its user base from North America, from the United States more specifically. Those users generate a much higher average revenue per user than from any other part of the world. So if Snap can generate any kind of growth, because it's been flat for North America, for the United States, for Snap for several quarters now. So if it can demonstrate any kind of growth from that region, I think investors will get more excited about Snap stock. Now, revenue growth and cash flow growth have been great, and I want to see more of that when they report the updated results. In the most recent quarter, revenue increased by 14% and cash flow from operations increased by 40%. They generated 230.6 million in cash flow from operations, which was up from 164 million in the same quarter last year. This can be a lucrative business if you see what Meta Platforms is able to deliver at the much larger scale. You can see the potential for Snap, even if they never reach the size of Meta Platforms. If they can just be a fraction of that business, it's a lucrative business model. The user generated content business model, where Snap's not paying people to engage on the platform, but they continue to open the app, make posts, comment on their friends' posts, share stuff, and engage on the platform. And all the while, the more time they spend on the platform, the more opportunity it is for Snap to deliver advertisements where they generate revenue. All right, the last thing I'll mention to look out for is other revenue. I've liked the fact that Snapchat Plus, which is a subscription revenue service, is growing significantly for the company. And in the most recently completed quarter, they exited the year with an annualized revenue run rate well over 500 million. This diversifies the company's revenue base away from advertising exclusively, and it allows the company to reduce fluctuations in revenue as a result of fluctuations in demand from advertisers. And that's a lower risk situation for Snap. So the more this part of its business grows, the more it's reducing its risk. And I'll share with you where specifically that comes into play most prominently. So here's my valuation model for Snap, where I calculated a fair value of the business at $32 a share. Right now, it's only trading at $8 a share. So, needless to say, I think this business is hugely undervalued. And the area I was talking about earlier with risk is the weighted average cost of capital. Right now, the company's WACC is 9.2%. If they continue increasing the share of Snapchat Plus revenue as a percentage of overall revenue, it can reduce this weighted average cost of capital, which is the denominator for discounting all of the company's cash flows and creating a big upside to the company's share price by reducing the weighted average cost of capital. Now, when I went to FinChat.io to get the forward price to earnings valuation for Snap, I also see a significantly undervalued business at a forward PE of just 22. I think these shares are significantly undervalued. And so going to my valuation recommendation spreadsheet, I can share with you that I do think Snap shares are a buy heading into these quarterly earnings release. The risks that I'll be looking out for most notably is a pullback in advertiser spending as a result of the uncertainty from tariffs. That's one specific risk I'm looking out for. I'm also looking out for the risk of declining users from the US and North America. I mentioned how that's a very important segment for all social media businesses. But for Snap specifically, it's a big risk because they've been flat in this area. They haven't demonstrated any growth. So there's a big chance that they can actually experience a decrease in the quarter. Whereas if they were growing, then a decrease would be less likely. The more likely scenario of a downside would be a slowing of the growth or maybe a significant decrease of the growth. But since they've been flat, there's a big risk that it could turn negative. And once it turns negative, then all the question marks begin from investors asking, is this a one off negative or is this going to be a trend where they will continue losing monthly active, daily active users from its most important region? So those are the two big things. And the second thing, the decline in monthly active users, the more important thing I'll be looking out for as a downside from Snap in the upcoming earnings release. Just to remind everyone, I still think it's significantly undervalued. I think the risks are to the upside, and I do think it's undervalued enough where if you want to take a greater risk and buy ahead of earnings, it's okay to do that in my opinion. I If I was trying to lower my risk, I would cut my purchase in two, buy half before earnings and buy half afterwards. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.